I am starting to record. Let me uh, share.
Girl, your smile is everything.
So, wait, slideshow. Okay, there we go. Hey, everybody, welcome to session 5. We're in the Money Moves Academy, Financial Freedom Lab. We in the lab, y'all. We in the lab. Welcome. I am Dana Mack, and today we are working on investing made simple, long-term investing for beginners. And I'm a dedicated advocate for financial literacy and generational wealth. So, through this Money Moves Academy, my mission is to help you understand money in a way that feels real and reachable. Quick disclaimer, I am not a financial advisor. This is for educational purposes only. And we got to make sure we say that because when it's not the family up in here, we don't know who might do what with what. All right. So here we are, investing made simple. So this is long-term investing, and we're going to talk about the power of compounding. Compounding, that is our friend. Okay. Let me just make this smaller. Let's get on it. So again, here I am, Dana Mack. I'm a mindset coach, educator, consultant, health and wellness practitioner, and author. And again, my goal with these sessions is to bring this financial literacy piece, especially investing, to us in a way that we can easily understand and comprehend and make some moves that makes us feel good about our futures and what we can do to build generational wealth. Okay. So again, I am not a financial investor. Everything shared today is for educational purposes, only to help you understand the basics of investing and make confident, informed decisions as you continue your financial journey. Okay. So, no, not me. And again, we connected to the 8 dimensions of wellness, as you see here in this wheel. So, wellness is not just about our physical, it's about our spiritual, emotional, our occupational, intellectual, environmental, social, physical. And today we are focused on the financial, and how we manage our money, how we're able to invest, which is the goal for today. And just to feel confident in that because as we all can, agree on, we didn't learn this when we were in high school. And we happen to have been in high school together. So I know you didn't learn it because I am we were all there together. So that doesn't mean that we don't get to learn it now. Okay. There's no better time than the present moment. So just know all of this is interconnected and it matters for you and your whole being. Okay. So we're looking at the whole being, not just sectors. Okay. All of it is impending on what we do in one area or another. Okay. So, what is investing? What is that? Well, it means you're using your money to own things that grow over time. You're buying ownership. We're not out here gambling. We're not at the casino. We're not just throwing good money after bad. We are making examples for our future generations. And it's like buying a share of Disney or buying a share of Target or Tesla and holding it for 10 years, okay? And letting it use that magic word I want you to remember is compound interest. Okay. So what it's not. So here we have the New York Stock Exchange, and these are floor traders where they buy and sell all day. Most of the times we get confused as we're learning that we'd have to be able to do that in order to invest in the stock market. And nothing could be further from the truth. You don't have to do that. What you can do is learn how to be a long-term investor and not take as much risks as comes with this, or hiring a financial advisor or someone who does this for you. Okay. We're not day traders, although day traders are doing things like waking up at 5:30 a.m., watching the market and buying and selling and chasing quick profits. Or we're not doing options trading either. It's betting on the stock prices. We're doing something that's different. what is what we're doing. We're investors and we're going to buy, hold, and let it grow. We're building long term wealth and we're not chasing fast money. Okay. So let's go here. So let's start investing. So today we're going to be looking at Fidelity and M1 Finance for beginners. So get you a notepad, um, pen, pencil, whatever you like to write with, so that you can take notes because we will be watching a few videos so that we can get a clear understanding. And from there, I'm going to show you my accounts because I don't expect you to do things that I have not done already or that I am not doing. So we will look at my accounts as well. Okay. How did I learn to invest? There's actually three people. The third person, we will watch one of his videos, but for some reason I could not, for the life of me, get his picture in here to stay. So this is Ashley M. Fox, and I learned about REITs from her. And this is a book that I also bought on the internet, but it's real estate investment without you having to go out and buy an actual building, right? And so REITs are easy to access stocks. And basically, it's when you look at it, it's like you're buying in, think of like on the corner of Orange Grove and Fair Oaks, and think about where the Vons used to be. There's now a Vallarta, and then there's a pizza place, the Blaze. There's a Chase there. There's also a what is there's a donut shop. There's also a um, what do you
Starbucks,
the Starbucks? Yep, and then there's something else. There's a
Sally's,
yeah, and
Sally's
then
Tasty.
right, there's Sally's, and then there's that sandwich place,
Subway.
Subway, right? So they don't own those spots. Those spots are owned by someone who owns that whole land, right? That lot. They own that lot and they just rent the spots, right? And so with renting the spot, they are basically paying a landlord. You can buy a piece of that stock and become a real estate investor and access it for like $22 per share, $23, $30, right? So those are real estate investment uh, trust, and different companies like the Bellagio, they don't own that building. They rent it from a company called O Realty, right? And so I learned these things from her. In our last email, I did put a video out that you could watch that showed how she goes about that and show you how to access it. And you can do that with having an M1 account or a Fidelity account. Okay. So that's Ashley. And she actually has a training coming on later today that she emails. Once you get on her list, she'll email you. And she even responds to me. If I ask her a question, like on Instagram, she will respond to you. Okay. And this is George Archampong. I am in a group called Melanin Millionaires. It's a club, it's a mastermind group, and I pay to be a part of it. George is half of the founders. It's Carter, Cofield, and George. And George is also a writer for Forbes. And what he does is finances. And I learned about M1 by being in the group with him. And he even shared with us. So, M1, you make pies, right, with different stocks. I even learned that his pie that he's had since 2021 is, I looked at it today. Last time I looked, it was like 100 and something thousand. It's already at 300,000. But he gave us his pie to mimic. Now, remember, he does this for a living. So he's already vetted the actual stocks that are in there. And I won't take away from you to do your due diligence and your research and create a pie that you might like. But I will say that this pie does have a very high diversification in it, and it's moving. It is moving. So these are the people that I learned from. And the third person is Stephen Chin. He was a public school teacher who's currently a millionaire. And the way that he teaches you how to get into stocks is also very easy. And some of his videos I've always included in our email correspondence for you to be able to uh, watch and learn on your own time. Okay. So there's Ashley and George. Okay. So now you're investing homes, Fidelity Investments, and M1. There are many other brokerage firms that you can go with. I am sharing what I am familiar with that's easy to use and access, and um, less of a struggle trying to get involved or insert yourself into the market. Okay. Fidelity is great for Roth and traditional IRAs. What I've learned from Stephen Chin is you want to have uh, a Roth IRA because the tax implications for with a traditional, they're slightly different. So basically, you're either going to pay taxes now or later, right? Who wants to pay taxes now? But a lot of his videos that I've shared give you like a breakdown of how you can use your Fidelity account and even your M1 account. I'm going to lean more toward the Fidelity when it comes to the Roth because of their longevity, because of the assistance that they give. You can call them today. Matter of fact, you could call them when we get off, and they have 24/7 assistance. And when they have someone on the phone, they are great. They will come into your account, you'll have it on your computer, and they'll help you navigate it. They'll be able to go in there and show you exactly what it is that you need to do. So you can always ask questions. So once you feel empowered by the information that you'll get today, make it a point to contact them, and they will answer any question. They will show you exactly what you need to do when you let them know, hey, I want to purchase a stock. If you haven't done it by the time we finish this video, and from what you learned today, and even just updating your account or continuously learning more, they are there. Their support is A plus. Okay. With the M1, I like to make the pies where I can buy separate stocks. So in my M1 account, I have a REITs pie, and we just learned about REITs, right, in the book, and what Ashley Fox teaches, an easy way to buy real estate. Like you can be a part of that. So I have one pie that has REITs in it, and then I have one pie that has ETFs, right? And then I have one pie that has a mixture of just dividend stocks, okay? And this is, again, an easy way to get into it, user friendly. If you have ever received a Zelle or you've sent the Zelle, you can get into these Fidelity or the M1 account and be successful in moving money around and buying stocks. Okay. And I won't say selling, even though that's something that you can learn to do, but we're looking at the long term strategy, and you want to buy and hold. Okay. So inside Fidelity, where does the money go? So if you started your Fidelity account, when you open up the account, it's going to ask you, where do you want the money that you put in to sit? So basically, these two options are like having a checking account and a savings account in your regular bank, right? Before you move it to buying securities or assets. So it's going to ask you, do you want it in the SPACs or do you want it in F cash? And so this is like your smart money savings mode. And this is just your cash is waiting. And again, if it's sitting in here, it's not doing anything. So you have to direct it somewhere. But this comes up when you open your account, and you have to say, okay, where will it be held? So that way, you know, when you see this, what is this asking me? Well, that's what it's asking you. Okay. And then you have to point it to what you're going to buy and what type of account you're going to have in either an individual brokerage account or a traditional IRA or a Roth IRA. Okay. So Roth vis traditional IRA. So Roth IRA pays taxes now, grow tax free. Traditional IRA pay taxes later when you withdraw it. So the Roth is the tax free growth machine. And again, when you are looking to open one, this is the one that you want to open. Okay. And you can do that in Fidelity. Also, you can do it in M1, but I would encourage you to do that in the Fidelity again, because this is your long term. This investment is you saving for retirement. And depending on your age, the amount that you can put in for a year, because there are limitations. If you're below 55, it's 7,000. But if you're 55 and above, it's 8,600 that you can put in. So I am actually waiting to transfer money from an account that I have at Westcom that is not performing well, that I'm going to put in my Fidelity to have uh, transferred over to put into my Roth IRA. Okay. So M1 Finance, the power of the pie, right? So your M1 pie is made of slices. Just think of like a pizza pie, right? And each pie is a stock, and you get to pick what you want. So you could have like 40% of an S&P 500 ETF, or 20% in Apple, 20% in a REIT, 20% in bonds. And you can also have it rebalance it. Like if one stock is not performing all that well, you can click a rebalance button. It'll rebalance it for you. As you put more money in, you can allocate it. I don't do the rebalancing. The What I have is what I've learned from Ashley and Fox about the REITs, and did my research as well. I have my REITs pie separate from um, like my stock pie. And the stock pie is the one that I got from George, that is already allocated. Again, doing research on my own. We call that due diligence. And having my ETF pie. So I have three separate pies, okay, that we will see. Go on. So, what is it that you're buying? Well, a stock is a piece of a company. And for example, Apple, their ticker symbol that you would see on the stock market is AAPL. So, some of the letters that are in the actual name will be in their ticker. Okay. And so REITs, we talked a little bit about that, real estate investment trust. So all these different companies, there's O Realty, there's Simon, they own like those corners I told you, they own malls, they own storage places, like where storage places are. They own hotels where the Bellagio are. And they have their own like names, like there's Realty, there's Simon, there's G&L. Those you can actually invest in, and they pay dividends. And the important thing that you want to note when you're looking for a stock that pays dividends, if it's 4% or higher, because we can put our money in a high yield savings account, which we've already discussed in a previous session. And if it's already at 4%, then I don't need to invest in a stock this way. I can just put it in an account like that. So you're looking for them to give you a return. And a lot of times it's going to be like between 8 and 12%. And that's money that you can get back. But the goal is to reinvest that money and buy more stocks. Okay. ETF is an exchange traded fund. I'm going to give you an example of what that means. So say we were in the grocery store and we were in the aisle that has all the potato chips. And on that aisle, we got Lay's, we got Doritos, we got popcorn, we got, pretzels in bags, we got um, those blue corn tortilla chips or whatever. So an ETF is like a basket with a lot of different stocks in it, so that you're not taking on so much risk, putting your money just into one stock and worrying about how that stock performs and if you're going to lose money. But back to the analogy of the grocery aisle with all the potato chips, it's basically you're getting everything on that aisle instead of having to pick just one. So that's what an ETF is. It's like you get to hold all of those things in that aisle, and you're diversified, which means it's less risk for you. Okay. And the good thing about getting into the market, you can buy what they call fractional shares. So you don't have to start with a bunch of money. You don't have to start with hundreds or thousands of dollars to start investing. The good thing about Fidelity, which is another reason why, by listening to Stephen and how he breaks it down, not all brokerage firms or investment firms that have the brokerage accounts allow you to buy fractional shares. Fidelity does, even M1 does. So if we look at this example here, say we were going to buy Apple stock and it was at $180, right? But you wanted to start investing with 10 bucks. Well, because you can buy fractional shares, pieces of it, parts of it, you could take that $10. Now you own 0.055 shares of an Apple stock. Not saying that if you got $180, if that was what the price is, and we could find that out by going to Yahoo Finance or looking at Market Watch, we can figure out what the current price is. But this is just for example purposes. Yes, you could buy one. But if you're like, hey, I just want to start, I want to get my feet wet, you could use 10 bucks and start. And because you can buy a fractional share, you're not forced to buy the cost of the entire stock. Okay. So it makes diversification easier and you can own pieces of many companies. Okay. And this is great for us who are beginning and starting to build wealth. So there's something else that you want to be concerned about is what we call DRIP and dollar cost averaging. So DRIP is dividend reinvestment plan. So think about the money that you can get back that you get from a REIT, right? Well, you don't want to take that money out. You want to take that money and reinvest it. So in your Fidelity or your M1, you can turn on what we call DRIP, dividend reinvestment plan, and you can reinvest automatically. Okay. Now, dollar cost averaging is something else that we want to pay attention to. That means every month, if you are able to do between $10 and $100, you can set it up where it pulls from your bank account so that, let's look at the example of, I'm doing this fractional shares. I haven't bought a full share of anything yet. But if I do dollar cost averaging and I have a certain amount going in every month, then at some point I will have one share of Apple from our example. Then I'll have two shares. But that doesn't mean if you come across some money, you could dump it in there and, you know, instead of, taking it and going to buy something that is not going to bring you a return, just socking it away, put it into your brokerage account and let it reinvest and invest it in more stocks. And again, consistency beats timing every time. Okay. So at this point, I want to know, does anybody have any questions so far? Anything that they want to say or anything they want to share?
Awesome job. Thank you.
Oh, you're welcome. One thing that I'm going to put in the chat, I made a glossary of the terms and I wanted to share it with you guys. So let me add that. Let me get that for you. Let me see. Or, no, I'll make it available for us once we're done, okay? So we don't have to come out of here. So compound interest, this is the magic multiplier. So once your money makes money, it's using itself to make more money. And this is when you think about when people say, oh, I want to make money while I'm sleeping. This is it right here. This is it right here. Compound interest. So your money is earning money, then that money earns money. And, depending on how old you are, you can start now and do what we need to do. But if you have younger, members in your family, you got children, like these are the things that you want to share because the younger and the sooner you start, the more that you can accumulate and grow. The difference is if we're a little older, we got to sock more away, right? Because we're trying to play catch up. But that doesn't mean you cannot start where you are. So this is not to discourage us from starting. It's just understanding that when we're talking about compound, interest, like this is the secret sauce, and this is the magic right here, okay? Because that money is in there, and that's why we're looking at long-term strategies, okay? Set it, forget it. That doesn't mean we don't check our accounts, but the goal is to let it grow. And whenever you come across some extra cash, our mindset has to change where we're not going out to buy something that's not going to give us a return. And I have calculated the monies that I've spent on going out, to restaurants and eating for my business taxes. And that was like $6,000, right? Now, do I get a write off on that? If I sat down and talked about business, which I did, yes. But think about it. For those who don't have an LLC or an S Corp or a C Corp, and you're going out and eating like that, count up that money. And this is to those who think, well, what if I lose my money? Well, this is where we learn about research, because if you research the market and look at the trends, it's continuously going up and up and up. The market does fluctuate with things that happen, in our nation, across the globe, but those are the things that are normal, right? You can't be fearful getting in there because there are going to be fluctuations. Whenever that president does something, something's going to change. You're going to see something drop. Whenever the guy that owns Tesla does something, you might see it go up, you might see it go down, but you can't let that scare you. And this is why we diversify. So being in the market means that you are what we call, and we'll get to this in the end, you're an intelligent investor. And this is one of the best books that's recommended for beginning investors, those who are already investing, because it gives you all the information that you need so that you are, as the book says, an intelligent investor. Even Warren Buffett, says something great about this book. Okay. So time in the market matters. So when we're talking about the market, you'll hear the words bull market and you'll hear the words bear market. You're like, well, what does that mean? Bull and a bear. Well, in a bull market, prices go up. We're being very optimistic about what's happening. We're currently in a bull market. Bear market, prices are going down, opportunity to buy more. So when things are going down, that's the time that you want to get in. That's the time you want to buy, right? You're not looking at, oh, it's down. No, they're cheaper. So then you can get more of them. Maybe not have to do the dollar cost averaging, especially when it comes to REITs. That's when you want to buy, okay? And you stay focused during both, whether it's a bull market or a bear market, okay? How do we track the market? How do we know what's going on in the market? Well, there's a website called Yahoo Finance. And if you're able to, on a different device, I want you to bring this up. You can learn the prices of the stock. You can get back information. So when you hear the words due diligence, like, what does that mean? Well, you want to find out what's happening with that company, what's happening with the prices. Is there anything new going on in the news with that company? Let's get informed. And you can also find their ticker number. So once a company goes public, they have their IPO, they're going to get a ticker symbol. And what I learned today on another website, Investopedia, is that there's some ticker symbols that have 3 letters, there's some that have 4, and the difference might be if they're an international stock or not. I didn't know that. I learned that today. Another website, TradingView, this is where you can see the candlesticks, right? You see the red and the green. You can go there and you can chart trends and you can see what has happened with the stock. These are all good things that you can learn, but this is not going to keep you from starting to invest. But as you want to grow your knowledge, these are the sites that you want to go to help you to be in the know and to start acclimating your ear to hearing the different words when it comes to finance and stock and investing. Okay. Investopedia is basically those 2 words, investing, and it's like an encyclopedia. It's got all the information there for you. You can learn terms, you can see examples. So I would encourage you to make a bookmark or like a folder on your phone or laptop and put these in there. Okay. And one that I would add is also Market Watch. And you can also, again, look up ticker symbols like Apple or Tesla and get information on whether the stock is going up. You might see a green little triangle arrow or going down, which is the red arrow pointing down. Okay. And again, this is the long game. We are not looking to get rich quick. Okay. This is not about, I'm not going to say it. This is not about that, but you're building ownership and freedom. And patience is your power. Okay. Patience is your power. So keep that. Okay. So we want to make that clear so our mindset is not thinking, outside of that. And again, compound interest is our friend. So, what's an index fund versus an ETF? What's the difference? So, let's get some clear understanding on that. An index fund tracks specific markets and their index is like the S&P 500. So, you probably hear that when you're listening to the news, when you are, uh, you know, seeing like the tickers go by and it might be something giving you some information. You might see those letters, but it's managed automatically to mirror that index, right? Um, the NASDAQ, the Dow Jones, right? But an ETF, an exchange traded fund, works like an index fund, but trades all day like a stock, right? And those are when we can get like those baskets of maybe it's a sector of technology, maybe it's the tech, uh, like not just technology, but it could be even like a sector of, I don't want to say like hospitality, but like um, pharmaceuticals or something like that, right? You can make a pie that only has ETFs that deal with technology. It's going to be up to you, right? What you want to put in that pie. If there's things that you know that you shop and you buy and you deal with, you like, no, I want to buy a stock in this because I'm always buying this. I got Sony all around my house. May as well invest in it. Or you can find an ETF that has a lot of different technology based companies like Sony and buy one of those. Okay. Both give you instant diversification and lower risks. The main difference is the index fund is priced once per day, ETF trades all day at market prices. Think index fund, long term savings, ETF flexible trading options. Okay. So let's look at the money that we get from doing all this investing. And many times when you're going on different sites or you're watching videos, they won't tell you that from that money, you're going to have to pay taxes on it, right? But here's the thing, we're spending time in the market. You're going to have a lot of money in there in order for you to see a 1099 that's going to make you feel like, oh my God, like this is a lot. So usually, if it's less than, I think, $300, you're not going to, be held accountable for that. But you'll get the 1099, right? But this is not a lot that you have to be in fear of, oh my goodness, I'm making more money. The goal is for you to make more money, right? That is the goal. But I thought it was important to make sure you understood this, that if you are receiving dividends, company profits are shared with you, the investor, usually quarterly. Um, you will see in your statements that you may have received, how much you received, if there's a position that changed, but you'll get a form, a 1099, and it's issued if you earn $10 or more in dividends. And they are taxable income, even if you reinvest. So just be aware of that that's not something that was hidden from you or you didn't know. You want to look for that. But if you have a Roth IRA, that's going to grow tax free. And in your brokerage account, if you were to put money in there, those dividends are taxable because you can have a brokerage account that you haven't allocated your monies to go to buy a security, right? or an asset or a stock, and it's just sitting there. It's like having a high yield savings account as well. There's a higher percentage rate than it just sitting in a regular Bank of America, Wells Fargo, Chase Bank, and not growing at all. Your best bet is to have it in a brokerage account and getting a higher percentage from them instead of just sitting it in a regular bank account. And Fidelity automatically reports this to the IRS, just so that you know. These are the parts that you need to be aware of so that it's not something hidden from you and it was never shared, okay? So when we look at Dow Jones, NASDAQ, and S&P 500, the Dow Jones is the industrial average. So it has 30 large established US companies, price weighted, and it's a snapshot of the economy's biggest players, right? The NASDAQ composite is 3,000 plus tech and innovation companies. Market cap weighted, and big tech has the most influence. The S&P 500, it's 500 of the largest US companies across industries, the best overall measure of the US market health. And you can invest through, again, ETFs like DIA, Dow, QQQ, NASDAQ, or SPY, and VOO at the S&P 500. So there's some top ETFs there that can get you access to all of those, okay? And again, we can buy those either in our Fidelity account or in our M1. So now let's buy a stock on Fidelity. So we're going to get into this video and we're going to watch. And again, take notes so that, you're informed. Even if I do share these videos later, when you're writing things down, it solidifies into your brain that much. I think it's 20% more than just watching or viewing and even reading. When you write it down, not only is it going to be solidified 20% more into your memory, but when you write it down, you make it happen. All right. So let me
Hey guys, welcome back to the channel. Today we're going to take a look at how to buy a stock on Fidelity. So we'll walk through how to fund your account, how to actually buy or sell a stock or an ETF for the first time, and then we will also take a look at how to turn on dividend reinvestment. If you're new to the channel, be sure to subscribe and let's go ahead and open up Fidelity. Okay, so starting with funding your account, you're going to go to that Accounts and Trade tab at the top, select Transfers, and from here, this is the page where you can manage the bank accounts that you have connected to your Fidelity account. This is where you can manage your automatic deposits and withdrawals. So we're going to start with actually connecting a bank account. So we are going to select the option over on the left, which is deposit, withdraw, or transfer money. If you're connecting a bank account, you'll want to select link a bank account. And then we can go ahead and press continue. This is going to take you through some security steps. That way they can make sure that it's you that's actually connecting the bank account. So you'll either get a text message or an email or a code sent to you somehow. And we're going to go ahead and click next. So from here, you'll be able to choose if you want to do an electronic funds transfer, a wire transfer, etc. And then we can start actually entering our bank information. So first you will click link a new bank, and then you'll just need your routing number, account number, and your account number again. And then you would agree and continue, and that is that. After you're done doing that, to make sure that it actually went through, you can go back to that same transfers page, and from there you can click on view pending transfers. And if you deposited money, this is the page where that deposit should actually show up. If you wanted to connect a bank account to go ahead and set up automatic investments, you would go back to that transfers page and select that second option in the middle column. And this is where you actually have the option to go ahead and set up those automatic investments. So now let's go ahead and take a look at how to buy a stock. There are actually a couple of places on the Fidelity site that you can go to make a trade, but we're going to start by going back to that same Accounts and Trade tab, and we're just going to select that trade option. From here, you'll select which of your Fidelity accounts you want to buy or sell from.
Uh-oh.
Hey guys, welcome back to the channel.
Pull it back to where we were. I was going to say, that's where you would either buy something to put into your Roth IRA or you would buy something to put into your individual account. Okay. So let me get back to where we
account
were.
number again. And then you would automatic
Okay.
investments, you would go back to that transfers page and select that second option in the middle column. And this is where you actually have the option to go ahead and set up those automatic investments.
That's the
So
drip.
now let's go ahead and take a look at how to buy a stock. There are actually a couple of places on the Fidelity site that you can go to make a trade, but we're going to start by going back to that same accounts and trade tab, and we're just going to select that trade option. From here, you'll select which of your Fidelity accounts you want to buy or sell from. You can set that as the default. And then when you go to the next page, this is where we are able to enter our order to buy or sell a stock. If you're trying to trade something other than a stock, you'll have the option to change that with that first drop down, but otherwise you can go ahead and enter either the company or the ticker symbol. If you're not sure what the ticker symbol is for what you're trying to buy, do go ahead and Google it or use that search bar at the top right to make sure that you have the right stock. That first action box is where you select buy or sell. If you do not select either of these, nothing will show up in that order types box. So you do have to select either buy or sell. And then after you make that selection, then you can enter a quantity if you know how many shares you want to buy, and then the order types will show up for you. If you're not sure what these order types are, I do have videos going over all of these, so do go and watch those. But that is
You want to
where
keep it on market.
that selection.
Yeah.
Then
Keep
we
it on
have
market.
time in force. I'll have to make another video on all of these, but most people will either choose day or good till canceled. You'll notice that when we just entered this, we did have to enter a quantity of the number of shares that we wanted. Fidelity does have fractional shares, so if you want to switch to that, you can either click that link at the top, or we can go down to this viewed simplified ticket, and this will open up a simpler version of that order placing form. So we would select buy again, and now we have the option to either do shares or dollars. So if you knew, for example, that you only wanted to invest $5, that is where you would enter that dollar amount. And in this case, we would then have $5 invested in Sony. If
So
you
remember that
select
fractional
limit,
shares
then
that we
you have
talked
that
about.
box that pops up with the limit price. Again, if you're not sure what that is, we do have another video on the different order types. Something else that you can do with the fractional shares is that if you don't want to enter a dollar amount and you instead want to enter point something of a share, you can do that. So if you knew that you wanted half a share or 1.5 shares, you could just select shares and then type in that amount. For this example, I'm just going to do 1 share, but you could change that to whatever decimal you wanted. And then we would enter our limit price. And what's nice about Fidelity is that if you do something that's like kind of weird, when we go to the next screen, it's going to show us this little alert that's like, hey, the limit price that you set is actually higher than what the stock is right now. Are you sure you want to do that? Or do you want to go back and check? So if you do want to go back and edit your order once you see this review page, we're just going to scroll down, and instead of clicking on that place order button, we're going to click edit at the bottom, and that will take us right back to the previous screen with all of the information that we entered. So I'm going to go ahead and change that. And then I'll also just show you what it looks like when you do change it to multiple shares or a fractional share. It will change that total amount at the bottom so that you can see how much that stock is actually going to cost to buy. So I'm going to change that back to 1. And once we go ahead and click that preview order, we will see that that alert that we got previously is now gone. Once you take a look at this review page, if everything looks good to you, you can go ahead and click place order, and then we'll go back and see where we can actually see this order that we placed in our portfolio. So let's go ahead and select that. And the next page will give you a confirmation number. And from here, you can go to manage orders. You can also get to this page from those top tabs, but it's easiest right after you place an order just to go to this page, and you can see that it was filled at 96.64. If it was not able to fill at that price, it may say pending or something similar to that. That is because the order has not yet filled, but once it does fill, it should say filled at and whatever price. You can also look at a more detailed version of this. So if the order executed in several different trades, so maybe it bought some at 96.64 and it bought a little bit more at 96.63 or something, that breakdown would be underneath that bottom tab. Now, if we actually want to see this in our portfolio, we're going to select that positions tab at the top, and this will show you all of the stocks and ETFs and funds that you own within your accounts. So we'll see at the bottom where it's highlighted in yellow that we now own 1 share of Sony. This will also show you what the last price was, the daily gain and loss. All of that information is going to be on that main positions page. And I have it blocked out, but at the very bottom, you'll always be able to see your account totals. So we went over how to get to the trading page from that main navigation tab where we just clicked on accounts and trade and then trade. But once you're on an account page, you'll also see this black bar at the top. And this will bring up kind of a quick access window to do the exact same thing. So if we click on the trade one, it will pop down this drop down that basically has the same information that we had on that main trading page that we use. As of when I'm filming this, they don't have that fractional shares set up in this little window yet. So you would need to go back to that main trading page or click that first link at the bottom and it will take you back to that exact same page that we used earlier in the video. If we go back up to that main navigation and we click on Active Trader Pro, this is going to open up the page for essentially their day trading platform. So this is going to be similar to Thinkorswim, but it's Fidelity's version instead of TD Ameritrade.
And that's something that we don't have to worry about.
Signed up
We're not
for
day
Fidelity,
trading.
or that's just what you're looking for to be able to trade with, that is where you would find that and you would be able to go and access the program from there. Now let's take a look at how to set up automatic dividend reinvestment. So we're going to go back to that accounts and trade tab at the top,
So this
and
is
then
the
we
drip.
want to click on account options. From here, you'll again have access to those automatic transfers, but what we want to look at right now is dividends. So we're going to go to that second little expandable tab where it says reinvest dividends. We're going to click on dividends and capital gains. And from here, this is where we can actually change whether or not things are reinvested or just where we want that money to go. So you'll get a list of the different securities that you own, so different stocks or ETFs or funds that you have in your account. And you'll see that some of these say deposit to core account or reinvest in security. So all that means is, do you want the money that you make off of that to go back into your main account, or do you want it to be reinvested back into the stock that you bought? If you want to change any of these, you're going to click on that update option at the right. And so if you are looking at a fund, it's going to look similar to this page where you have these drop downs. You'll see that we have options both for what we want to do with dividends and what we want to do with capital gains. And if we go back and we select a stock or an ETF that has the option to do dividend reinvestment, the page looks similar but slightly different. So if you wanted to reinvest, you would just select that reinvest in security, and that would automatically set up those dividend reinvestments for you. And then you have a couple of check boxes at the bottom just asking what you actually want to apply that change to. So then you would click update and you would be good to go. If this video was helpful, be sure to subscribe to the channel, follow us on Instagram, and I will see you guys next time.
Okay, so that was a lot of information, but you do see that there is a very easy way to get into buying a stock. Now, I'm going to say this. As I'm giving you the information of how to do it, this is not for you to go out and buy. You could, if you choose to, one individual stock, because it's not diversifying, not cost effective. It's better for you to pick an ETF and buy an ETF. Remember, I said that ETF is that basket or that aisle at the grocery store, and you don't have to pick just the, the sour cream and onion Lays. You can get the Doritos, you can get the popcorn, you can get everything in an ETF. So you're diversified, and your money, you're not just going to lose your money because you bought one stock. The goal is for us to buy ETFs, okay? So right now, before we go to the next video, I want you to pick up your phone, even if you don't have an iPhone, because I have an iPhone, but I think all phones should have them. You're going to go to the place where you see stocks. So our phone comes with these, generic, uh, already set apps. There's one that has stocks. So it has a black background, and there's a white line, wavy line, and then a straight blue line there. So find that, and you're going to tap it, and you're going to open it up. Once you open it up, you're probably going to see some information. The first thing that I saw was Yahoo Finance, which we already talked about. It says Tesla, next Netflix set to report earnings as US-China trade fight turns unsustainable. What to watch this week. So remember, whenever something happens, it's going to affect these stocks. But what you're going to do right now, you are going to go up to the three dots at the top, and you're going to hit edit, and you're going to create a watch list. And I'm about to name off for you some top ETFs, okay? And then you can name it whatever you want. So you should see something that allows you to do new watch list, right? So once you do that, this is what you're going to put in. You're going to search for VOO. Once you search VOO, you're going to tap it, and then you're going to save that. And you can write these down as well if you don't want to do it in real time, but I think it's cool to do it in real time, right? So this is a list that I have, and I'm going to call out all of these different ETFs, okay? So we've got VOO. And then if you hit the plus button, it should allow you to save it. SPY. So you're going to see VOO is going to come up in white. Then it's going to tell you it's a Vanguard S&P 500. We already talked about what the S&P 500 is. It'll say ETF, and then it'll tell you the price of it. It's $610.76 right now, right? And it's up, the plus sign, $3.37. SPY, write that one down, or create your watch list in real time. You can see the price, $664.39. QQQ, we saw that one on the previous slide, right? IVV, SCHD, and those are their ticker symbols. I'm calling out their ticker symbols, okay? VTI. Now, these next three are specific to Fidelity. They have ETFs that you can buy as well. The difference between some of the others is that they cost less, and they're tracking some of the same. So when I get on calls with Fidelity sometimes and talking with them, they'll tell you this, right? And you can see it. It's not that you have to take their word for it. You can see that it's tracking some of the same 500 indexes, and it's cheaper. So this one is FXAIX, FXAIX. Another is FSKAX. And another is FSPSX. That's an international one. So those you can get in your Fidelity, okay? Another one is QYLD. Another is PEY, SDY, DVY, DIV, VYM, QQQM, MGK, VUG, SCHG, JEPI, and JEPQ. That's a long list. This is not for you to think about, oh, I would buy all of these. No, you would, the top ones that I gave you, the VOO, the SPY, QQQ, IBV, SCHD, those are some of the top ones, right? But I want you to see with creating a watch list, how you can see how all these different ETFs are performing. And when there's changes. So when you create a watch list, you can do this on your phone. You can do this with TradingView. You can create a watch list in M1. You can create a watch list in Fidelity. What are you watching? The movement of the stock, the changes of the price and the stock. Okay. So this is something that you can do right on your phone in that stock app that you probably have never opened. I even have one for my REITs. I even have one for REITs, but we won't go over that right now. But you can do the same thing. Okay. And then I have one just for stocks. And when you look at it, look, let me go here. There's one red right there. That's down right now. That happens to be Amazon. Okay. So it's down. But this is how we watch stocks. And you can do this also on Yahoo Finance too. Okay. So let's get into our next video. So I know that was a lot of information. Hopefully you took notes, but it's giving you the access that you need to be able to understand what's happening when you start to invest.
Hey guys.
Okay. So this is Steven, the gentleman that I said I could not put that picture in there no matter what. I like his videos because he makes things very, very clear, and he speaks in a way, not that the other young lady didn't, but this is how I learned a lot of the things that I learned. I follow him on Instagram. I follow him on YouTube. And in addition to Ashley and George, that's the trifecta that I'm working with, these three people here. Okay. So let's get into this. So this one is how to invest as a beginner. And again, he's going to be using Fidelity.
So you want to get started with investing, but you don't know where to start. You don't know what brokerage company to choose, what kind of accounts to open up, how to deposit money into your account, and what to buy for your assets. Well, in this video, I'm going to do a step-by-step tutorial for absolute beginners to investing to get...
Uh-oh, how did that go? Just a little touch. Sorry about that.
So you want to get started with investing, but you don't know where to start. You don't know what brokerage company to choose, what kind of accounts to open up, how to deposit money into your account, and what to buy for your assets. Well, in this video, I'm going to do a step-by-step tutorial for absolute beginners to investing to get you started. Okay, I really believe that investing isn't all that hard, but getting started is really the hardest part in this journey to financial freedom. So once you get over this hump, everything else becomes much, much, much easier. And yes, I highly recommend that you watch this video all the way until the very end. So this way you understand all the steps to getting your accounts set up. All right, without any further ado, let's get started. Step number 1. You need to choose a brokerage company. There are a whole bunch of different ones out there like Vanguard, Charles Schwab, which TD Ameritrade is now merging to, and Fidelity. And really, you can choose whatever you like the most. There are other ones like E-Trade, Robinhood, Webull, Moomoo. all which I've listed on my money cheat sheet here. I'll leave a link down below if you want to download this, but they all pretty much do the same thing. If you're someone who values customer service, then you probably want to go with TD Ameritrade, Charles Schwab, Fidelity, Vanguard, E-Trade.
And I like
These
your
are the
service, that
brokerage companies that
fidelity.
have been around for a very long time. Typically, whenever I call TD or Charles Schwab or even Fidelity, which I actually call them I think 30 minutes ago, they respond very fast and they're very professional people. With these newer apps like Robinhood, Webull, Moomoo, sometimes these apps that are more geared towards mobile devices, their customer support is a little bit more on the slower side. If you want to get a hold of them, you have a question, you might have to email them or you have to chat with them using their own chat function, which can take anywhere from like 1-2 days to get a response. The thing with TD Ameritrade, Charles Schwab, Fidelity, Vanguard, E-Trade, sometimes their apps and their interface on your mobile device, or your phone, your tablet, is a little bit on the older side. Some of these apps look like they were built in the 1990s or early 2000s when Windows XP was still around. And I don't know, I just
But
think
that's not what
the
fidelity
user
or
interface
M1.
can be upgraded a little bit better. However, with
They've got
Robinhood,
good
Webull,
technology.
Moomoo, some of their interfaces are a little bit more friendly. It's the user experience is a little bit better. But again, that's just my opinion. Another good thing with TD Ameritrade, Charles Schwab, Fidelity, Vanguard, E-Trade, these larger brokerages, is that they offer a lot of different functions. Maybe you can open up different accounts like a Roth IRA or a SEP IRA or a simple IRA. And some of these other mobile apps don't allow you to open up these different types of accounts. If you're someone who is more of a buy and hold kind of investor where you buy some shares of ETFs or stocks, then you can just go for TD Ameritrade, Charles Schwab, Fidelity, Vanguard, E-Trade. If you're someone who wants to be more proactive with trading, I guess, which I don't really recommend, then yes, I guess you can use Robinhood, Webull, or Moomoo, where you can easily access your app and trade on your phone. But again, with my philosophy, I like to buy and hold for the long term and compound my portfolio for the next 10, 20, 30 years. Overall, it's really up to you on which brokerage you want to choose. If you're a complete beginner, you know what? You can just go for, I guess, the safer option where you choose one of these larger brokerages like Schwab, Fidelity, or Vanguard, because these are the ones that I've used and I've never had any really big problems with them. Once you choose your brokerage company, the next thing you want to do is open an account. And there are so many out there like a Roth IRA, taxable brokerage accounts, traditional IRA, the list goes on and on and on, just like what you see here. But really, I want to make it simple for everyone here. If you are someone who just wants to invest, you don't want any contribution limits, then you can just open up a taxable brokerage account. Or if you want to invest for your retirement, such as opening up an individual retirement account, an IRA or a Roth IRA, then yeah, you can open one of those up too. I've made many videos on Roth IRAs in the past, so feel free to check out my YouTube channel to see those videos there. So let's dive into step number 2 and actually open an account. Let's just say that I choose Fidelity as my brokerage company and I'm going to click on open an account on their main website.
We saw this
A whole
before.
bunch of accounts are going to open up here and I'm going to choose an individual taxable brokerage account, a regular account right here. The good thing with a taxable brokerage account is that you can contribute as much money as you want into this account and you can take out your money without any early withdrawal penalty fee compared to an individual retirement account, an IRA. However, there aren't going to be any tax advantages because anything that you make from your dividends, your earnings, from your covered calls, whatever it is that you do in your account, that is going to be taxed. So once I click on the button, I'm going to say that this is going to be an individual account because I'm just opening it up for myself. I'll click on next. I'm going to say that I'm not a Fidelity customer. Click on next. And then I'm going to be brought up to this application page where I need to fill out my first name, last name, social security number, address, email, phone number. And really, it takes around 5, 10, 15 minutes at most to fill out this entire application. And once you fill out your application and open your account, then you should be brought to this dashboard here where you can see everything. Okay, so what's the next step? The next step is for you to set up recurring deposits to put in money into your taxable brokerage accounts. Remember that with any brokerage account, with a Roth IRA, traditional IRA, taxable brokerage accounts, it's very similar to your savings and checkings accounts where you can put some money inside. The only difference with this is that with your brokerage accounts, you can actually buy assets that are going to grow over time. You can buy some stocks or low-cost index funds or exchange-traded funds. This is something that you can't do with a regular checking or regular savings account. So how do we deposit money into our account? Well, that's pretty easy. We're going to go to the button right here where it says transfer money. And then I'm going to choose add a bank or recipient because I want to connect my bank accounts, whether it's from Chase, Wells Fargo, Bank of America, and connect it to my taxable brokerage account. I'm going to click on continue, and then I'm going to choose EFT. I'm going to say that I'm choosing to send money to myself, and then I'm going to click on continue. I'm going to click on continue one more time. And from there on, it's going to ask you a couple of security questions like linking your phone number to the account and setting up 2FA or two-step factor authentication. Okay, so once I link up my bank account to my taxable brokerage account, I'm going to go back to the same page right here, and then I'm going to actually transfer some money. I'm going to go all the way down here, and I'm going to say that I want to deposit $500. Now, here's the thing, folks. You can deposit however much you feel the most comfortable with, but you need to make it a habit to deposit money into your account every month. This is a habit that all wealthy people have. And remember that all successful people, they don't just become successful overnight. They do it because of the habits that they develop. Every person who becomes really strong, they go to the gym every day, or they eat very healthy pretty much every day. And likewise with money, if you want to grow your money, you have to practice being good with your money, such as depositing money into your account every 2 weeks or every month. This is something very strange for a lot of people because we were never taught this at an early age. But you need to make it a habit so that whenever you get your paycheck, you set a percentage, a portion of that paycheck, and deposit it into your retirement account or your investing account. This is a good habit to develop for your savings and, of course, for your investing as well. So for me, for example, I'm going to say that I want to deposit $500 every month, and I'm going to click on this recurring button. When it does that, I'm going to say frequency, choose monthly, and then type in 500. And then I can click on continue. From there on, you can see that my start date is going to be on October 3rd, 2023, and it's going to withdraw $500 from my checking account on the 3rd of every month. So the next time I get my $500 deposit, it's going to be on November 3rd, and then the next one is going to be on December 3rd, so on and so forth. And can you change this amount later on? Absolutely, you can. The goal here is to increase this amount every 2 or 3 months or so. So yes, I could be depositing $500 this month, and next month, but then later on, as I'm being more conscious with my savings and I'm earning more money, then I can set my recurring deposits to maybe $600 a month, and then $700, and then $800 a month. And the goal here is to make it as automatic as possible, because if you automate this, it's going to be less painful, I promise you. It's also going to teach us on how to live on less, which is an important lesson that all wealthy people know. If you're depositing money into, say, a Roth IRA, maybe you can make it a goal to max out your Roth IRA contributions or deposit up to $6,500 a year. If you break that down into 12 months, that's going to be around $541 per month. And of course, just as history has shown, the IRS likes to increase these contribution limits every other year or every 3 years or so. So this $6,500 contribution limit can increase to $7,000 later,
It's
and then $7,500, and so on
for
and so forth.
2025.
So your goal is to max out your contributions as much as you can or comfortably as you can. So this way you can compound your portfolio as quickly as possible. The last step with setting up your account is to actually buy assets that are going to grow in your portfolio. There are a lot of people who will set up their accounts, put money inside, and then that's it. They just stop there. And they assume that because they put money into their Roth IRA or taxable brokerage accounts, that account or that money inside is going to magically grow. That's simply not true. You actually have to buy things inside assets like stocks or ETFs that are going to grow over time. So what are the things that you can buy? Well, you can buy stocks, ETFs, just like what I said. And if you're someone who says, well, I don't know what stocks, what companies to buy, then it's okay. What you can do is invest in an ETF or an exchange traded fund. And essentially, you are buying a basket of stocks where you don't really have to choose what individual stocks to invest in. Typically, I like to invest in ETFs that track the S&P 500. What's the S&P 500? S&P stands for Standards and Poor's, and 500 represents the top 500 companies in the United States. This includes Microsoft, Apple, Amazon.com, Alphabet, Google, Tesla, McDonald's, Pepsi, Coca-Cola. Basically, anything that you see out on the streets, on your desk, in your home, most likely that brand or company is part of the S&P 500. And these are the companies that have proven to many investors over the past several decades where they are able to make money in the long term. They're able to increase their top line revenue, that their products are always improving. And basically, they make these investors super happy for them to hold onto them in their portfolio. Okay, so what ETFs do I like? Well, these are my favorites, but in the end, you can invest in whatever you like. If you are someone who wants to invest in the S&P 500, then there are ETFs like SPY, VOO, IVV, FXIAX, and SWPPX. Some of these are just general funds. They're not exactly ETFs. Some of them are also mutual funds too. But regardless, these are all funds that track and mimic the performance of the S&P 500, all the top companies in the United States. You might be wondering, should I buy one of each? Well, typically you just want to stick with one of them because they all essentially do the same thing. Some of their expense ratios might be a little bit different. Some of their company holdings ratios might be a little bit different too, but in the end, they're all pretty much the same thing. I don't want this to confuse or overwhelm you. Just choose one of them that you like. You can do a little bit of research on and just stick with one of those, and you can add on to your positions on that one specific ETF or fund. If you want to diversify to maybe over 3,000 companies rather than just 500 companies, you can invest in something like VTI. If you're someone who likes to collect dividends, then you can invest in a dividend ETF like SCHD. If you want to invest in maybe the Dow Jones Industrial Average 30, which are the top 30 companies within the S&P 500, like McDonald's, Coca-Cola, Apple, Microsoft, these companies that have been around for a very long time, you can invest in something like DIA. Or if you're someone who likes technology stocks and you don't mind a little bit more volatility, then you can invest in QQQ. This is a fund that tracks the NASDAQ 100, which includes Amazon.com, Alphabet, Google, Facebook, Meta, Microsoft, and even Apple. And as you progress further into your investing journey, if you want to start looking into companies and how well they perform, then you can invest in individual stocks. Like for me, I like to invest in companies like Apple, Microsoft, Visa, and Home Depot. And all of these companies are all part of the S&P 500. Okay, Steve, so how do I actually buy shares of these ETFs or stocks? Well, I'm going to show you right now. So once you go onto your dashboard, you're going to click on this magnifying glass or quote sign and then open it up. I'm going to type in the ticker symbol of whatever it is that I want to buy. Let's just say, for example, I want to buy SPY. And I'm going to click on this. A detailed list is going to pop up right here, and it's going to show me how much one share is, the bid and the ask, the volume, or how many shares of this ETF was traded for the day. And I'm going to scroll down right here, and then I'm going to click on trade. This menu is going to pop up on the left-hand side, and then I'm going to say that I want to buy this within my individual account. I'm then going to click on the buy button because I want to buy some shares. And then I'm going to say how many shares I want to buy. So let's just say that I deposited $500 into my account, and one share right now is $427. This means that I can buy just one share right now. So I'm going to type in one share. Okay, so this is where some people get kind of confused. They're like, should I buy a market order or a limit order? If you choose the market order price, this means that you're going to buy one share of SPY for around $427.48. You might buy it for $427.49, or you might buy the share for $427.45. However, if I click on limit, I basically get to set the maximum price that I'm willing to purchase the share for. So if I type in $427.40, this means that if the stock drops maybe 8 cents, and then the brokerage will automatically buy one share of that for me. And that's the maximum limit that I'm willing to purchase the share for. Now, there's good and bads for this because, of course, I can set a price that I am comfortably willing to buy the shares for, maybe for a lower price. However, if the ETF does not drop down to 40 cents, then my brokerage is not going to buy one share of this ETF. So typically for me, what I kind of say for beginners, you want to just choose a market order because just these couple of cents that you might or might not save is kind of irrelevant in the long term. So just place a market order. After this, I'm going to click on preview order and then submit. And then I have one share in my portfolio. So setting up your account, putting money inside and buying shares isn't really that hard. But you need to make sure that you set a habit. You develop a habit of paying yourself first every month by automating it, which we talked about already. But once that money goes into your account, you need to set up a schedule for yourself so that you buy 1 or 2 or 3 or 4 shares of some sort of ETF or stock every beginning of the month or every 2 weeks or whatever it is that you're comfortable with. You need to make sure that you remind yourself to do this. Otherwise, money is just going to go into your account and just sit there. And basically, it's just going to be like a regular checking or a savings account. And the value of your money is going to be eaten away by inflation. And I know that I sound like a broken record, but this is really how all wealthy people do it. They put money inside into their investing accounts and they buy assets that are going to grow over time. It might not sound like a lot right now, or just buying 1 or 2 shares, but later, as you see in the next 2 years, 5 years, 10 years, 30 years, you're going to have a whole bunch of shares. And a lot of these shares that you purchase might have some sort of stock split. So you'll get even more shares. And all of these shares, hopefully they'll pay you some sort of dividend. So you will be transitioning from working for your money to letting your money work for you, where your money is literally making and producing more money and paying you something every quarter or every month or so. All right, I hope this video helps. If this brought you a lot of value, feel free to give me a like or a subscribe, and let me know if you have any comments down in the comments below. I really try my best to answer all of your questions.
And he really does. So I do follow him, like I said, and I do ask questions. I get his freebies, like that chart that you saw that he had. And it's important to know that you can do this. So I hope those 2 videos for Fidelity made sense and that they were helpful to at least let you see that this is something that you can do. Now, when it came to me picking the ETFs that I put into my Roth IRA and the ETFs that I put into my PI and my M1 account, I listened to him. And he's got other videos where he talks about it. Like if you can see down here, he says like 3 ETFs that he would buy. And so he has a lot of videos like that. And then I went and did my research. I went on Market Watch, I went on Yahoo Finance, I read up on them. And again, for my Roth IRA, I picked one. I believe I picked SPY. And I purchased that, and then I keep putting money in to continue to purchase more shares. You don't have to buy a lot. It's like, again, if you buy that one aisle, like I said, with that analogy, at Ralph's, they've got the potato chip aisle, and then I went to Food for Less and bought that potato chip aisle. Like, they're the same things. You're going to find a lot of the same things. So why would you buy 2? No, you just keep buying more of that same stock so that you have more shares of that one stock. If it's 400 and something dollars, then you need to buy one at 400, then another one at 400, so that you have more of those instead of buying more of the different stocks. Okay. So I hope that that's making sense to you. And from here, we're going to go into the M1. Does anybody have any questions, any comments? And I want to check in to make sure that everybody's good. Any thumbs up?
Off my computer. Can we get his name to follow him?
Yes. Yes. His name on Instagram is Call, CALL 2TO Leap, LEAP.
Okay.
And even if you go on YouTube and put in Call to Leap, it'll come up too.
Thank you.
You're very welcome. Very welcome. Okay. So it's a lot, but I hope that it's becoming easier for you to see, like, this is something that I can do, especially you, Cindy. I know you told me like, I haven't done anything or bought anything yet. So is it making it clearer what you can do?
Yeah, it is. I follow Steve too, and all his videos are real clear and simple. And I screenshot them, and I'm like, okay, I'm gonna go back and look at it later. I'm gonna go back and look at it later. I'm gonna do it step by step, and I ain't did nothing yet. but his videos, I really like him. His
Yeah.
videos are really, really clear and simple.
But I hope now you feel like I can go and do this.
Yeah,
Like that's
it's
the
giving
goal.
me with the different ones, it's
yeah,
giving me more understanding
I
of
can go in,
the process.
yeah, open my account and I know what to click and feel confident
Yeah,
about that.
yeah,
Okay.
yeah,
So that's what I'm looking for.
yeah.
Okay. So now we're going to get into the M1.
Investing.
I think I'm going to do this one. So in the M1 account, what I like about this one is you get to create like a pie. You can think of an apple pie, you can think of a pumpkin pie, you can think of a pizza pie, okay? And this is where you can put individual stocks. You can also buy the ETFs. You can also open a Roth IRA or a traditional Roth. But again, I'm going to say with the other brokerage accounts, Vanguard, Charles Schwab, Fidelity, I would encourage you to do that over there. And then here for the individual stocks. And I shared with you earlier how I learned to do this with George being in the Melanin Money group, the Melanin Millionaires Mastermind group. And George, who is a writer for Forbes, he's a financial advisor. He shared with us in that private group the actual pie that he has. And after this video, I'm going to share my pie with you. And so I would encourage you if you are going to open your M1 account to mimic that pie as well. Because again, all the companies he's already vetted, he's done his due diligence, doesn't mean that you can't as well. But what I'll tell you is that the one that I do have as a mimic of that pie, it just steadily is climbing and climbing. Okay. So let's get into this video. And again, if you have already started your M1 account, connected your bank account, this is going to help you to know what to do once I share that pie with you. And if you want to, I would encourage you to make a pie of companies that you like, just so you get to see if you were to put $100 in there, what's going to happen. And I'm going to use that analogy of the things that we buy that we get no return on. So this is not a time for us to think, oh, well, whatever can happen to my money if I lose my money. Because if you are eating out, you don't get a return on your money. If you are buying things that, are, not an asset, you're not getting a return on your money. And that could be clothes, that could be handbags, that could be shoes. So having a paradigm shift as to, yes, I'm allowing myself to be in a position where I can buy assets and things that are going to bring me a return versus using our money to just buy things that have no, value once we purchase them. Even our cars depreciate as soon as we drive them off the lot, right? So we want to get better at buying assets that are going to give us some type of return. All right.
So one of the most unique features when it comes to M1 Finance is being able to create these slices of pies right over here. So that way you can have different types of stocks or ETFs into different sections if you want to, or you can have them all together, whichever way you want to go. But for a lot of people, they like to split things up like this. So that way they can keep things organized and looking great. So the way we're going to do this is go ahead and create our pie. Now our pies can include anywhere from 1 to whatever number of stocks we want. I believe the max in your portfolio can be up to 100. So keeping that in mind, if you want to go with a higher number, you might have to create multiple pies. But right over here, as an example, in our growth section, we actually have 4 stocks. In our retail section here, we have 3 stocks. And if we go into our tech, we have 2, and so on and so forth. So we have a limited amount in each slice to help keep things manageable and help us go through the process of having everything the way we want it long term without having to pay attention on a day-to-day. So how do we go ahead and create these pies? Well, the thing we want to do is actually go into our research section, which is going to be towards the top page here. So we're going to click here, and this is going to get us a whole new section of M1 Finance that
there's that SPY again.
The first section here
is
with
VIA,
news,
and there's that
next up is going to be the stocks that we can choose from. Then the ETFs and funds that we can choose from.
ETFs.
We also now have crypto, which is very new, and we haven't talked about that yet, but it is going to be there. Then we have a section called My Pies. This is where we're going to want to go into. And then we're going to look at expert pies here in just a little bit, as well as creating a wait list with stocks that we are interested in and want to pay attention to. So let's go ahead and click on My Pies. And you can see here, I actually already have some that are used and in stocks and funds account. And then I have some that are not actually used, but I had created before and I can add to my portfolio. But we're not going to add those yet because I want to show you how to go ahead and build one. So right here it says build a stock and fund pie. So we're going to click here. And this is going to be the page that opens up for us. So how do we go through and create this pie? First, we want to name the pie. If we want to say food, right? So we're going to add food companies in here. So food. You can put emojis in there if you want, like I've done before. You can add descriptions in here. So we can do, fast food. If you want to go ahead and add any details on there. So once we have all that in there, now what we're going to want to do is add some slices, which are essentially different stocks or funds. So you can see right over here where it says add slices, or slice, I should say. We're going to click on here. And it's actually going to take us to this page where we can go ahead and choose different stocks. Up towards the left, we can click on funds instead if we wanted to do ETFs. And so what we're going to do is look at the different companies. We can go ahead and start searching. It usually starts with the market cap first. So you see Apple and Microsoft at the top. On the left side here, you can actually see a bunch of different filters based off of things that maybe you are looking for. If this is not really your expertise here, don't worry so much about the filters if you don't want to. You can see the different sectors as well too, just to kind of keep in mind. But if you're somebody like myself who already knows what we're going to be adding into this pie here, what we're going to actually want to do is just go ahead and go to the search section over here. We can either go by symbol, if you know the symbol for the company, or you can just type in the company name. And because I am very hungry for some Chipotle, we're going to go ahead and put Chipotle down. So I just started typing in Chipotle and it started coming up. So we can click here and it takes us to pretty much the information page for Chipotle. You'll see a lot of data points like the graph. You'll see some of the price point right here, the market cap, PE ratio, and some of the other important information to note when it comes to this company, as well as some news towards the bottom here. So that's always good information to have if you want to go in depth with them. Sometimes I recommend outside sources like seekingalpha.com is a great website. So let's go ahead and add Chipotle to our basket. So you're going to see this option right here. We're going to go ahead and click on there. And now you can see it says remove from basket, which at the bottom of the screen will have Chipotle. So it shows that we're building our pie. So next up, let's go ahead and do Domino's. Because again, we're doing food companies here and I'm getting really, really hungry. So we're going to go ahead and add this one also to the basket. And then we can also do, let's say, Wendy's. Let's say we're super into Wendy's.
Making an interesting pie.
We can go ahead and add to basket. So you can see them piling up at the bottom of the screen right over here. I'm going to put my arrow so you can see here. So they're adding up together. Now, I'm a little bit in the way here, but there is an add button right over here, right next to my icon or my screen here. But it just says add, ADD. And so if these are the companies I want to add, let's say I can do more in the future. That's totally cool. But for today, I just want these 3 companies. We're going to click on that add, and then you're going to come back to this original page where we put in the name of the pie. Now, what this does automatically for us is pretty much breaks them down into an even amount based off of how many companies we added. So if we did 4, they would be broken down to 25% apiece. Now, I choose to want to have these as different targets. And what this actually does for us is allow us to have a certain amount of our overall portfolio dedicated to each of these stocks, as well as to each of these pies. So for us, as an example with Chipotle, maybe I want Chipotle to be 50% of this pie. You can see right over here, it says I have to remove 16% to get to 100 because that's what is the max. Max for any pie can be 100% of the pie. So I have to go ahead and lower these other 2. I can choose whichever amount I want. Maybe Wendy's I only want to be 15%. Which then drops it back up here to say I had to add 9% back to get to 100. So I'm going to go ahead and add that to Domino's. So if this looks good for me, you can see on this pie section over here, it kind of gives you a visual showing that Chipotle takes up half, Domino's takes up 35%, and then Wendy's would take up 15%. If this looks good, I can click on continue at the top here. Now, one thing I really want to stress out here is that you can change these numbers day in and day out, multiple times a day if you want to. It doesn't actually affect anything, and we'll go over that a little bit more too. But if this looks good for now, you can go ahead and hit continue, and then it'll take you back to this page that we were at earlier. So if I scroll down here, because it's not in my account currently, I technically already had one food thing added, but this one is the fast food one because we created that here. There's an option here that says add to portfolio. Now, if you are brand new to M1 Finance and this will be your first portfolio, this will take up 100% of your overall portfolio. But as you add more of these slices into your overall M1 Finance, that percentage has to change. And I'm going to show you here back at the main account here for us on M1 Finance. Let's load up here. So these are all my slices. So let's pretend this one was the food option that we just created. Well, if we added it to our portfolio, see here, this is 29%. So the first one you add in will be 100%, but the second one you add in has to at minimum be 1% and the other one has to be 99%. But ideally, you want to have a more reasonable percentage for each section that you have. So you can see here that my actual growth section takes up about 29%. That's my target. It's way above it for now. My retail, I would like at 23%. My tech section, I would like at 22%. Finance and so forth, you can see all the different percentages. So as you keep adding more slices in, you're going to have to change those percentages, similar to when you saw those 3 stocks that we were adding in and you had to get it to 100. Same thing when you add the overall slices right over here into your portfolio time and time again, because you're going to have to keep it at 100%.
So you get to see how that looks, how he did it. I'm going to share my pie with you, and I'm also going to share the link so that you can copy that pie. Okay. So quick review. We looked at how to open a Fidelity and M1 accounts, understand the SPACs, VIS, the F-Cash. When it's just sitting in there, it needs to know, what are you going to buy? Because if you don't, it's like sitting in a checking account and a savings account that we would have in a brick and mortar that we could walk into. Nothing's happening with it. We learned about Roth and traditional IRAs, and that for you, it's better, it's cost effective to go with a Roth IRA versus a traditional, and how you can buy a stock, and usually you only need to buy one. And if it's going to be 2, you don't want to buy 2 ETFs that have the same aisle of chips. You need one, and you need to buy multiple of those so you have a lot of that 1 share or 2 shares, making sure that they're different in that Roth IRA. Or you could have an individual brokerage account and do the same thing. Buy an ETF. The difference is the Roth and the traditional are for retirement, and the other is just because you want to build and grow your wealth and be able to access it whenever you want to. We looked at how to build a pie on the M1 and how to turn on drip. The drip is once you receive a dividend, you want it to go back so that you can reinvest it. And the dollar cost averaging is you coming up with an amount so that you can keep putting it in there to buy more assets. If we haven't even bought a full share and we're doing fractional shares, we want to be able to keep loading money in, right? $10 here, $20 there, $30 there, or setting it to a certain amount, $100 a month, so that it keeps buying, so that it does keep growing. That's how your compound interest, that magical, sprinkling of that, how's it going to grow is going to happen, because you need to dollar cost average and turn on that drip. Those are important features. And then track your investments. We talked about creating a watch list on your phone, right? So that what do I use that app for? That's a way that you can use it. I gave you a full list, but the top ones that I gave you, you're going to start to seeing those everywhere. The VOO, the VTI, the SPY, the SCHD, the IVV, you're going to see those because those are the top ETFs, okay? So I encourage you to look them up and learn more about them before you make your first purchase. And track your investments. Once you put something in Fidelity or in M1, call up those reps, ask questions so that you become more knowledgeable. You're going to feel so different even after this session about what it is that you can do. And again, let compounding work for you, okay? So you're an investor now. So let's go look at my M1. I'm going to come out of here and I'm going to stop sharing here. Yay! And let us pull up. Let's see, I already have it pulled up actually. let's go to, we'll look at M1 first, and then okay, so let me share my screen with you. So this is my actual M1 account. And I'm going to, if you can see here, you can see the date that I started, right? That says March 14th. And I put in $500, right? And if you can watch this, you can see April, May, June, July, August, September. You can see that it keeps growing. And me, like you, I wanted to know that I knew what I was doing. So I started just a little bit. And it has grown. And that is the very pie that I'm going to share with you. So let's see what's in that pie. Okay. So here's the pie here. And the MMC stands for the Melanin Mastermind group that I'm in, right? Because this is the pie that George gave us to mimic. So I felt comfortable doing that simply because I know that he knows exactly what he's doing because of what he does. He's in finance, right? So when you look at the pie, you can see what's in there. Palantir, QQQ is in there. You saw that one. NVIDIA, Apple, Meta, you know these companies. Coinbase, Tesla, Google Alphabet, SMH, MSTR, Microsoft, XYZ, PanW, Amazon, and Lilly. And you can see the different percentages. They are. So this was an easy access for me simply because I'm working with someone who has done this already. So it makes it easier for me to get in. Here's my ETF pie. And you can see again. And I wanted to show myself, not only could I do this, but if I started with a little bit, would it gain? And I started this one, I believe, with $100. And you can see right there. So I don't have to make this up. And you see what's in there. Now, the difference is if I put more money in. If I put more money in, okay? And here are the ones here. I got QQQ, BTI, SCHG, SPLG, SPY, VOO, SCHD, MGK, VUG, IVV, all the ones that I told you to put in that watch list. There they are. And then I did one with REITs. And these are the things, these are the ones that I had learned from Ashley Fox. So there's Simon Property. I talked to you about that. There's O Realty. Those are the ones that own Bellagio. And again, remember the up arrow lets you know that it's gaining. Down lets you know that it's for the day, what it's lost. There's GNL, public storage. So I wanted you to see, I did this. You can definitely do this. I created this one today. I haven't put anything in it, but I wanted you to know you can do it too. You can definitely do it too. So me see if I can. And it lets me know what I've earned. Oh, then I also opened a high yield savings account in here as well. So again, these are things that you can do too. Okay. So this will be the one that I will share with you so that you have it if you choose to mimic this. So this is in real time. And again, you can see what I've put in it, what, and the growth. So I'm going to copy this right now. And I'm going to stop sharing. I'm going to put this in the chat. So right now, it is in the chat so that you actually have that that pie. Okay. So there you go. And if you have questions, once you start to go in and you want to send money in to your pie and make it active. And if you have questions for me, definitely reach out to me so that you can get your questions answered. Okay. So as we come up on the end of this session, feel good about what you learned, because once you start to execute, that is a key. You can get all the knowledge in the world, but until you execute, and once you do it, you can't break anything. Like, money's not going to go anywhere. If you make a mistake and you're like, oh, I wasn't trying to buy that, I was trying to buy this, you're going to be okay, because their customer service for both of those entities. When I first signed up on N1, guy showed up and did a Zoom call with me. Okay. And we walked ourselves all the way through all of it. Okay. So start small, stay steady, watch your money grow. Okay. And here's a quote from Warren Buffett: we don't have to be smarter than the rest, we have to be more disciplined than the rest. Okay. And we know that he definitely knows exactly what he's talking about. Okay. And again, back to self-care and balance. It's not just about one part, our physical part. We have to be aware of all these other areas and how they are interconnected and help us to be whole individuals. Hold on, guys. I got a knock at the door.
It's on your.
Okay, hold on. Okay. And then where do I look for it?
If you go to your order, so go to your account, and then your order, and then click on the item that is
Okay, right there.
yeah, and then
Oh, okay. 3, 2, 3.
perfect. Thank you.
Okay, thank you so much.
Have a
Okay,
good day.
you too. Okay, thank you guys for waiting. And so this is, again, is the 8 dimensions of wellness. And so the story of the Wall Street Bull. So this was created by an Italian artist, Arturo Di Modica, in 1989. So it was placed outside the New York Stock Exchange as a symbol of resilience when the stock market crashed in 1987. That's the year I graduated. Some of y'all in here too. And so it represents financial optimism, confidence, and aggressive pursuit of success. So we call that a bull market when prices are rising. Energy high, confidence strong, symbolizes strength, perseverance, and prosperity in investing. So you want to be confident in your investing, okay? And now what happened was they did remove it from being in front of the stock exchange because it was like, what we call, guerrilla activism. But they did put it back into the Bowling Green Park in New York City, and millions of people visit it every day because it is a global symbol of wealth and, prosperity. All right. So, what is your call to actions for your money moves? Create your watch list. Add your stock picks, use your phone's app, label, each watch list, either ETFs or REITs, stocks. Stay in the know. Add Yahoo Finance and Market Watch to your favorites. Check them daily. Learn to read the flow of the market. Invest intentionally. Decide your starter amount. It could be $10. It could be $100. Commit to consistent investing. Small moves build momentum. And I showed you in real time in that M1 because that one, what I like about it is that you can get in there and you can move stuff around and do things and play with it and change their amounts just so you can see what happens, just to get that feeling of, hey, I did this, I put $10 in there, I bought something, and look, it did this thing or it did that thing, okay? Learn the tools, watch the tutorials on the Fidelity and M1 Finance. You can rewatch them. And then you can schedule a call with Fidelity Support, a Zoom with M1 Finance, just so that you, on your own personal development level, get stronger and stronger at doing this, okay? And we like to read our way to wealth. I always give you a book list, the suggested book list. And for the Intelligent Investor, I showed you that I have that one here myself. And One Up on Wall Street. There's another one by Peter Lynch. And the guru of all this, Warren Buffett and Charlie Munger, they have University of Berkshire Hathaway. That's his company. And it goes over 30 years of what was happening in their board meetings, little notes. Like you're basically being a fly on a wall by getting this book and reading. Another one is The Psychology of Money. This one will help you to get a better understanding. And the book on REITs. All of these I got on Amazon, which is in that pie, right? And one thing's for certain, two things for sure. Some of these companies, we know how they have changed in their idea about DEI, but we get to still profit from them by buying these stocks because they are part of the global economy, and knowing in that regard that that is the case, we can still use it to benefit us, okay? So there's the contact information. If you want to reach out, there's my IG, email, and the website. Stay connected. I love to hear from you. And if you feel so inclined, if this class was motivational, inspirational, and you like the information, I have ways for you to send $10, $20, $30, whatever you think is something that you can show to keep the academy growing. I am truly appreciative. Okay. So thank you. And I hope that you have a beautiful rest of your Sunday. And let us stay connected and be, be mindful that this doesn't happen overnight. It's something that we can build and grow, but you do have support. This community is support, and you are in a safe space to learn about stocks and learn about, how to invest. And this is your course on Beginning Investing 101. Thank you again for your time. And if you have any comments, any things to add, please now you can come off of mute and give some feedback on what you learned, maybe a sentence or two or a couple of statements would be greatly appreciated.
Thanks a million, literally.
You're so welcome.
Yes, I second that.
Thank you. Thank you.
Danny, you did an awesome job. You really did. I mean, you broke it down. It was, I
Yes.
text my daughter, she at work. I'm like, dang, she work on Sunday
Yes.
because she has to do stuff. I'm like, she gonna be missing it. But
remember, I saved these
okay.
and they're going to be on the YouTube channel. So don't forget to, like, comment, subscribe. So it's, recorded all the previous sessions. So this is session 5, right? So all the previous sessions are there. The next session, you think this was great. Wait till we start talking about whole life insurance and trust. And then our final session is going to be about starting your business, your LLC. And remember, we talked about the dividends and how you get that 1099. Well, guess what? If you start a business and you get these write-offs, and currently this new administration favors businesses, you won't even have to worry about whatever you're getting because you'll be able to write it off based upon, what you're doing for and in your business, because there are a lot of deductions that you can take. So I'm glad that you guys are here to share this with me, and I will see you next week.
Okay, question. YouTube. What's your YouTube channel?
Dana Macc. YouTube channel.
Dana Macc. Okay.
Dana Macc. Yes.
With 2 C's.
With 2 C's. Absolutely. And that's cultivating that cash. All right.
That's it.
And you guys have a beautiful rest of the day. Thank you so much for tuning in.
Bye. Thanks, Dana.
Yes, you're welcome.
Bye, ladies. Have a
Bye-bye.
beautiful
Bye. Have a
Sunday.
beautiful Sunday.